Friends, I'm back. Let everyone join in. I'll just come in a minute. Let everyone join in. Yes, friends, I'm back now. Shall we start off? Good afternoon, everyone. So, shall we wrap up MTP test series number 2? Okay, let's do it now. Good afternoon, everyone. Then I think only MTP part 1 will be left. That I will schedule a date today itself. Okay, so once that is done, we will be 100% through with all the efforts for November 23. Okay, 1 minute. All right, so I think we were somewhere over here, right? Yes, this is the question that we need to work out now. Shall we start off now, friends? Okay. Good afternoon, Loganathan, Anjali. Good afternoon, everyone. So we'll write down working question number. What is the question number? 5B. Question number 5B. Working note number 1. Basic data. A bank enters into a forward purchase TT covering an export bill for Swiss franc 1 lakh at 32.40. So let us draw and understand this diagram. Customer, here you have the bank. So bank is entering into a forward purchase contract for an export bill, because when it's an export, what will the customer do? The customer is going to sell Swiss franc. In return, the bank is going to buy Swiss franc. All right. Against this, what is the customer going to do? Buy rupee, sell rupee. I think in this question, they have given rupee per Swiss franc. So by now, we would have understood it is going to be what rate over here? It will be the bid rate. Okay. 1 lakh at 32.40. I'll come to that part later. First, can you scribble down this in your books? Arjun, no, this is just a beginning. You haven't missed anything. Right. So I think you're all done with this part. Can I go to the next one? Okay. So now what I will do is I'll just stick to the basic data. Point number A, I will write down the current position. Okay. So if the bank is entering into a forward contract from a customer point of view, what has he done? He has sell 1 lakh Swiss franc at the rate of 32.40 rupee per Swiss franc. So do you get the answer as 32.40 lakh rupees? This is the current position. All right. Due on 25th April. He covered himself on the same day, covered itself for same delivery in the local interbank market at 32.42. So now tell me, if the original position is sell, what will be the cover-up action that he will take? He will buy 1 lakh at 32.42. So he will end up paying 32.42 lakh rupees. So by doing so, he is making a loss. What is the loss that he makes over here? Does he make a loss of 2000 rupees? Okay. However, on 25th March, the exporter, okay, wait, I think I made a small mistake over here. It is the bank that is doing the cover up, not him. So I will update that in the diagram. Okay. This is the current position that he has entered into. So let me go to the previous page. Okay. All right. So now what the bank has done is, let us say this is the London bank. Or I'll draw a fresh diagram for that. Let's not create confusion here. I'll keep this as rupees, sorry, Swiss. Yeah, correct. Rupees per Swiss francs, correct? Okay, I'll draw a fresh diagram here. So basically what has happened here is the customer. Here is the bank. Here is the London bank. All right. So what has he told? He has sold 1 lakh Swiss franc at the rate of 32.4. So what is the bank doing? Buy 1 lakh Swiss franc at the rate of 32.4. Bank has covered itself in the London market. How does the bank cover? Sell 1 lakh Swiss franc at the rate of 32.42 rupees per Swiss franc. Can you draw this diagram in your books now? All right, friends. I believe you're all clear with this part. Can I go to the next one now? Okay. So once you are done with this part, I'll take a fresh page. Now what they are saying over here is that he sell the bank covered. However, on 25th March, the exporter sought for cancellation. So they need to cancel the contract. So I'll draw another diagram to make it more clear to all of you. Okay, so the first day due on 25th April. So original due is happening on 25th April. 25th March. Friends, are you able to hear some noise over here? So here you have sell 1 lakh Swiss franc. Not much, but there is a. Thank God it's closed down. Let's continue quickly. So sell at 32.40. This is supposed to be due on what date? 25th April. Now what they're saying is that this wants to cancel the contract on what date? 25th March. Tell me, friends, how will you cancel on 25th March? You will buy 1 lakh Swiss franc at how many months forward? 1 month forward. So when I buy Swiss franc, the bank is selling Swiss franc. It will be the ask rate. So now tell me, what is the ask rate that you have over here? That we need to find out. I think that's not given over here. At the 1 month forward ask rate. All right. That will come on this point and these two things will get nullified. So I think for that, we need to find out the 1 month forward ask rate. All right. Can you draw this diagram in your books? All right. So I think you're clear with this part. So now what we have to do is we need to find out what is the 1 month forward ask rate. So I'll write down the next working note, 1 month forward ask rate for rupee per Swiss francs. Okay. So now here, what will happen is, let me just check. They have given Swiss francs per dollar is given and rupee per dollar is given. So we need to use cross rate in this case, correct? So what are the 4 steps in cross rate? Step number 1 will be what? It will be the desired rate. So here, what is the desired rate? Rupee per Swiss franc. Step number 2 is going to be what? Bid rate or ask rate. So this is you, the bank, rupee per Swiss franc. So basically, what am I supposed to do? I need to buy. If I need to buy Swiss franc, what is the bank going to do? Sell. So sell being the commodity, it is going to be what rate over here? Ask rate. That's all. Already I have written it over here. Step number 3 will be what now? Cross rate. So friends, here we have to create an equation. Tell me what will be the equation? Ask rupee per Swiss franc is equal to ask rupee per dollar into ask dollar per Swiss franc. Correct? So now ask rupee per dollar is given over here. We have to check the spot bar April, correct? Because in April 25th, we are doing it, correct? So here it is given 0.42. So it will be 49.42, or is it? Hold on. Are they swap points or are they the exchange rate that's given over here? Let me just cross check. It is the swap points given. Swap points are in ascending order or descending order? They are in ascending order. So should you add or subtract? You are supposed to add. So from the spot, 49.4455 plus 0.42 I should do. So I'll get 49.8655. 49.8655 into ask dollar per Swiss franc. But they have given Swiss franc per dollar. So I will do 1 divided by interchange is what I will do. Okay. So 1 month forward is 1.5160. There they have directly given the rates. Simply they will make your life miserable. So 1 by bid I will have to take 1 divided by 1.5150. Okay. So once you do like this, what is the answer you will get? 32.92. 91 rupee per Swiss franc will be your cross rate. Have they told any exchange margin? Exchange margin required by the bank is 0.1% on buying and selling. So ask rate means bank is selling the commodity. Bank will add the exchange margin while selling because it is their income. So you will get the answer as 32.94 rupee per Swiss franc. Perfect. I'll give you a minute's time. Write down and understand this part. Actually, one of the questions, they have treated that as exchange rate also. So that's actually a bit confusing. Plus, the numbers are so similar that you may end up taking it as a forward rate, and I don't deny that your answer is wrong. But only way why we are taking a swap is because if you see 49 point is given, down that is not given. But sometimes in some questions they do it like that. All right, friends. Are you all done writing this? Can I go to the next part? Okay. They have mentioned spot. Bhavya, yes, when they mention spot, there is a question in your study material where they have mentioned spot and they have taken it as a forward rate also. All right, I believe you're all done with this. We'll take it as swap points, George. Why? Because here, if you see, they have only given 41, 42, right? Take it as swap points. We'll go by the textbook. Exam also, you can take it as swap points only. Okay? Right. So I think you're done with this. You got 32.94. So I'll come back over here. So here, the rate at which you're going to take back is going to be 32.94. So what will happen is, here you have 32 lakh 40,000 and here you have 32 lakh 94,000. So what is the loss that you make over here? Do you make a loss of 54,000 on cancellation? Can you write down? We are done with this question. Fine, friends. I believe you're all done with this part. Can I go to the next question now? You should write in statement form, Sarvamangala. You want me to give it like that? I will show it to you. You want this slide? I'll give you in conclusion as to how it can be written. All right. Arjun, we added 0.1% because of the exchange margin. It's given in the question. So that's the banker's commission. All right. I'll just give you in sentence format as a conclusion. What you should do in the exam is you write down like this. Point number A will be what? Current position. So what is the current position that you have over here? You have, initially what was the position that you have? Sell at 32.4. Sell at 32.4. So you get 32.40 lakhs. Point number B is going to be what? Action to cancel. So what is the action to cancel? Buy at 32.94. 32.94 lakhs. Okay. Therefore, what is the loss that you make over here? Do you make a loss of 54,000? Okay. This is how you should write down. Fine, friends. I believe we are done with this. Shall we go to the next question now? Question number 6 is an easy question on valuation, H and B. They have given the balance sheet. So, friends, tell me, why do they provide you with the balance sheet? What is the question number now? 6A. Working note number 1. Basic data. Particulars. then you have H Limited, and then you have B Limited. Okay. Point number A is going to be what? Total assets. So what are the total assets that you have over here? 1,331.5 lakhs or crores? Crores. Point number B, outside liability, that is not there. Therefore, your net assets or your book value will turn out to be 1,331.5. Are you clear? Have they given the number of shares? 100 rupees each, 350 crore divided by 100 rupees. That is 350 lakh shares, correct? 350 lakhs, correct. So the number of shares, I think we'll just put that also. Number of shares is 350 lakh shares. And for the second one, 6.5 crore divided by 10 rupees. That's 65 lakh shares. Therefore, can I find out the book value per share? That will be 1,300 crore divided by 350 will give you 371.42 rupees. Divided by 65 will be 48.46. Hold on. Have I missed out on the contingent liability part? I think I didn't read the full question, is it? Proposes to buy out, the profit is given, company's capitalization rate is 8%. Okay, there is a contingent liability of 300 crores. So I need to reduce that. Thank you for correcting me there. That's for H, right? So here you have a contingent liability of 300. So you will get the value over here as how much? 1,000 crore. So 1,000 crore divided by 350 would give you the answer as 285.71. All right. Can you please write down till here in your books? Okay. Perfect, friends. I believe you're all done writing this. Can I go to the next part now? Okay, let me go to the next part. Fine. So net assets method is done. Now we need to find out using earnings capitalization method. They have told I'll write down working note number 2. I'll first put the data. Weighted average post office profits has been given over here. So I'll draw a table, particulars. You have H and then you have B. Okay. So post-tax earnings. What is the earnings of the first one? 300 crore. And the second one is how much? 10 crore. Have they given the capitalization rate? Capitalization rate is given as 8%. From this, can I find out the value using earnings capitalization method? So that will be 300 crore divided by 8%. 3750 crore. And here you will get the answer as 125 crore. All right. Perfect. Please write down this. So I'll write down value using earnings capitalization method. Wait, I think I can find out the per share value also, right? So how many shares are there over here? You have 3.50 crore share and the other one is 0.65 crore. 1071.42, 192.31. All right, friends, I believe you're all done with this. Can I go to the next part? Okay. So once you're done with this, next part they have told H limited to issue shares on the basis of the average, which is considered the weights of 1 and 3 for net assets and earnings capitalization method. All right, fine. So I will write down the next working note. Fair value particulars. Then you have two things: H limited, and the other one is B limited. Okay. So when you do it using either net assets method or we can do it using earnings cap method. So here the answer is 285.71, 48.46. And for the earnings cap method, you get the answer as 1071.43 and 192.31. What are the weights they have told over here? 1 and 3. Okay, so weighted average formula will be A into 1 plus B into 3 whole divided by 4. Do you get the answer as 875 for the first one? 156.34 is going to be the answer. So your exchange ratio will be 156.34 is to 875, or in other words, for every 875 shares in B, H will give only 156 shares. So we are done with this question also. Please write down and finish it off. Fine, friends. I believe you're all done with this part. Can I go to the next one now? Okay, so we are clear with this question also. Now let's go to question number 6B, right? 6A is done. 6B is again a question that we have done in our class, friends. Interest rate derivatives, working note number 1. Friends, actually our RTP, MTP is nothing but compilation of many questions from our material. So here I'll just read through this part now, okay? So principal amount has entered into a plain vanilla swap on a principal of 10 crores. I'll write down point number A. Principal amount 10 crore has agreed to receive a MIBOR floating rate. So he's going to receive floating versus this for a fixed payment. So pay fixed. All right. Down they have told the swap was entered on Monday and was for a duration of 7 days. So I'll write down duration will be how many days? 7 days. And they have given the rates also. He has received 317 on net settlement. So amount received on net settlement is equal to how much? 317 is received on net settlement. Sunday is a holiday, etc. etc. Bhavya, question paper also will be the same. Because if you are doing more number of questions, the probability of same question coming in the exam, it increases. So the chances of what we are doing, we did RTP, MTP, Super 25. There was a one-day marathon. You attended a 110 hour of crash. That also was full of questions, correct? And all these are study material questions only. So slowly, what happens is this gets inside your subconscious. And then exam also, whatever question comes, you normally will be able to attack. Okay. We have done quite a lot of hard work. You all should be able to score 70 plus. Less, we will leave it on God. We'll do our part 100%. That's what we can do. Okay. Can you scribble down this in your books now? All right, friends. Let's do it now. So here, what happens is you are receiving 317 on net settlement would mean, okay, floating is 317 more than what? Floating is 317 more than fixed. All right, that is the logic. So first what we have to do, we will go and find out the floating payment. I'll write down the next working note heading, floating payment. So once I get the floating, whatever answer I get, minus 317 will give me the fixed, correct? So I'll do that in Excel, friends. That will be easier for me. So I think I'll do it here itself. Okay, so now what is the first day that they have given over here? Let's check. It is from Monday and it goes for a period of 7 days, correct? So I'll write down Monday, Tuesday, Monday. All right. So we got the day over here. What is the notional amount that we are starting up with? Notional amount will be 10 crore. This is 10 crore. Okay. And the interest rate is LIBOR is given on different dates. So that's 7.75. So I'll write down over here LIBOR 7.75%. Second day is 8.15%. Third day is going to be 8.12%. Fourth day is 7.95%. 7.95%. Next day is going to be 7.98%. This way it is going to be 1, 2. It starts from Tuesday, I think. Wait 1 minute. The swap was entered on Monday, but Tuesday to Monday. So I think I made a small mistake here. I should take Tuesday first, then Wednesday, and then pull it downward, okay, until the next Monday data is given. So 7.98 is on Saturday, so Sunday will also be the same. And Monday will be 8.15%, all right? So based on this, now what I can do, I need to find out the interest. So notional amount into this, into 1 whole divided by 365. Friends, ideally we should take 360 days, but your textbook has done it using 365. 365. So what I can do is here, Saturday, Sunday being the same, I can write down over here as Saturday and Sunday. So that way what I can do, I can ignore this one column. Okay, so you get the answer as 21,233 approximately. Okay, so once you get this, next day balance will be this along with the interest. Now I'll just pull this forward and I will pull this forward. Alright, so these are the interests that you get and the closing balance. I'll put it over here. This plus this. So here you get the closing of 110 crore 1 lakh 31,853. So what is the total of interest that you end up paying over here? 131,853. One small mistake I have done here. It will be 2 divided by 2. So you get 153,740 as the number over here. All right. So just copy paste this whole thing. Fine. So once you get this as a floating payment, next I will go to the next page and I'll write down the next working note. Fixed payment. So fixed payment will be equal to 153,740. From this I'll reduce 317. So I will get 153,423. Next working note, therefore we will write down the effective fixed rate. So the formula for this one would be 153,423 is equal to 10 crore into some percentage into 7 divided by 365. So when you do a backward working, you get the value of X as 8%. Can you write down and finish it off? I'll first show you the previous page. It's MIBOR, is it? It's okay. You can call it as MIBOR. That's okay. That's okay. Fixed payment. Fine, friends. I believe you're all done with this part. You can do it using 360 also, Deepika. Nothing wrong. You want me to show you how the answer will change? Actually, 360 is the correct number. If I take 360, the numbers will change like this. Alone in this case, I have to do 2 into 362 divided by 360. You get 155,877. This minus 317 will give you 155,560. You can do it like this also, nothing wrong. All right. Okay, so I believe we are done with this. Shall I go to the next question now? Let's go to the next question. MIBOR is also done. Perfect. So this is done. We have only one more question pending. Shall we do that and finish off with our session on MTP, friends? Excellent. Let's do it. Now, this is a beautiful question. Take a deep breath, everyone. Are you ready? Let's do it. Question number 1A. Working note number 1. Basic data. VK is an Indian company planning to set up a manufacturing plant through its subsidiary in a small country far land, which hitherto it was exporting. So this is the Indian company. There is a company over here called as Farland. Currently, it is exporting. Now, what they are trying to do is, okay, set up a subsidiary over here. This is the current plan what they are having in the view of growing demand for its product. So this question is slightly similar to what we have done, but there are adjustments which are very, very good. An investment of FR 80 million in plant and machinery will be required. So I'll write down over here investment in plant and machinery 80 million FR. Friends, I'll go a little slow here. Can you write down this in your books? All right. Can I go to the next page now? Okay. So the investment in plant and machinery is 80 million. In addition to that, the initial investment in working capital of FR 6 million would also be required, which shall be financed through a loan. So working capital required is another 6 million FR would be required, which shall be financed through a loan. Okay. This working capital requirement will be financed through a loan at the rate of how much percentage? At the rate of 10 percentage. Okay. The working capital shall also be subject to inflation. So working capital will be subject to inflation. All right. Point number E. Down they have told at the end of 5 years, the subsidiary would be taken over by the government of Farland. After 5 years, subsidiary will be taken over by the government of Farland. So we need to understand every word given over here. Farland. 1 minute. Farland for a price of 2 million. Okay. Price offered by government. 2 million FR. Next part. They have told the part of the proceeds would be used to pay off the bank loan. Okay. This will be used to pay bank loan, not fully but partly. All right. It is expected that the subsidiary shall produce net cash flows from operations of 30 million per year. $30 million per year at the current price level over a 5-year period before allowing for Farland inflation of 8%. Farland inflation of 8% per year. Okay, 8% per year. Depreciation on plant and machinery shall be charged at 20% straight line basis. %20 straight line basis. As a result of setting up a wait, can you write down till here and understand till here? All right, friends. I believe you're all done. So let's repeat this part. Investment 80 million, working capital 6 million. This working capital, they'll take a loan at the rate of 10%. Working capital is subjected to inflation. After 5 years, government of Farland will take away the entire thing at 2 million FR, and this money will be partly used to repay the bank loan. Net cash flow 30 million. Farland inflation 8%. Depreciation is going to be 20% on a straight line basis. Okay. Now, I think once you're clear so far, let me just come down. As a result of setting up of the subsidiary, VK Limited expect to lose after-tax export income from Farland of 8 lakh per year in current price terms. So I'll continue writing here, HIJ. Okay. What's the name of the company? VK. VK will lose 8 lakhs per annum. 8 lakhs per annum in current terms before allowing for inflation. So this is before inflation. 1 minute. In current, but before allowing for Indian inflation at the rate of 3%. All right. So I'll write down HIJK. Inflation in India. In India will turn out to be how much percentage? 3%. All right. Next part. Profits in Farland are taxed at 20%. So tax in Farland is equal to 20% after allowing for deduction for interest and depreciation. So that is after allowing all the deductions. After all after tax cash profits are remitted to India at the end of each year. Okay. After tax profits are remitted to India. Okay. So now once it's remitted to India, Indian tax is 30%. So now double taxation is happening. Let's see what they have remedy for that. Is tax on profit, but due to a tax treaty between Farland and India, the tax paid in Farland is allowed to be set off. So here, Farland tax is eligible as credit. Farland tax is eligible as credit. Taxation is paid in the year in which the liability arises. So paid in the same year. Tax is paid in the same year where liability arises. Okay, what's the last part? Discount factor 12%. Friends, we are still only at the basic data. The current exchange rate is 2.5. Current exchange rate is 2.50 franc FR per rupee. Correct? And the Faro is expected to depreciate against INR by 5%. MNOPQR. FR is expected to depreciate at the rate of how much percentage? At the rate of 5% per year. All right. Guru Nirupama, we have reached R, S, T, U, V, W, X, Y, Z. Please write down till here. We'll go a little slow on this question. We need to understand that basic data first. Otherwise, we will never be able to solve this question. Please write down till here and understand. I'll go a little slow here. Anyways, the last question, so let's do it peacefully. Are you all ready, friends? Shall we start solving this problem now? Beautiful question. Let's start from the beginning. You also keep speaking. Investment in plant and machinery, 80 million. Working capital required, 6 million. Sindhu, you're saying I didn't start with this first. By doing this, I would have gone wrong in all other sums. Sindhu, had I started with this, I would have gone wrong in all other sums. That's why I didn't start with this. Investment 80 million FR, working capital 6 million. Loan, it will be taken at 10%. So basically, the cash outflow and inflow will set off, but we'll have to pay that interest. Working capital will have inflation. After 5 years, government of Farland will take it over at 2 million FR. This money will be used to repay the working capital loan of at least 2 million. Balance they will pay from their own hands. Net cash flow 30 million per year. Farland inflation is 8%. Depreciation is 20% on a straight line basis. VK will lose 8 lakh per annum before inflation. So this money again is an opportunity cost. Indian inflation 3%. Tax in Farland is 20%. After tax profits come to India, you're actually supposed to pay a tax of 30%. So what will happen is whatever tax you paid there, that will be eligible for you as credit over here. All right. Okay, let me see how that adjustment, that's a new adjustment. We'll just work out on that one. Discount factor 12%. Exchange rate is also given 2.5 FR and they say it's depreciating by 5%. We wouldn't have reached the next question. This is one important thing in the exam, friends. You should know which question to choose first. If you start with this question, your life will become miserable. I have a friend, friends, I don't know if I've shared this experience with you. Exam that 3 hours time, first 1 hour is the most crucial. It's like a cricket match, The first, 10 overs of the cricket match, if you can play well, then 90% chance of your success depends on the first 10 overs. If you lose wickets in the first 10 overs, confidence gone. You cannot take it forward. Exactly in the same way, exam hall, if the first question you take becomes an atom bomb question, that's it. That will bring down your confidence like anything. I started SFM with theory. By 2:30, 30 minutes time, I covered 20 marks of theory. High confidence. Why? Theory, you will not go wrong. You know what you are writing. At least I will get 14 out of 20. Pass mark is 40 marks. 14 I already got. I need only 26 marks. For this, I have 2.5 hours. So on an average, in 1 hour, I get one question correct. I will get 10 marks. It's more than enough for me to pass the exam. That gave me confidence, friends. And by 4:30, I completed the entire paper also and the answers were also right. My friend, with whom I did combined study, he was extremely good at SFM. But he took a wrong question. One atom bomb question he took first only. 16-mark question. Now, luckily, you don't have 16 mark. That time we had 16-mark question. 2 o'clock he started. 2:45 it got over. And 2:45 he understood that the answer is wrong. Now look at the mindset, friends. Almost 1 hour is over. You have scored 0 marks. You have another 2 hours with you. You have to get 40 marks. 20 marks per hour. Come on, do fast, do fast, do fast. In that pressure, he attempted only 65 marks and he scored only 32 in that attempt. Timing and the question decision has a very big role. So please choose your questions very, very carefully, friends. All right. Now, I think we are done with the data. What I will do from this is, first I will go and find out the hidden information. So I'll write down working note number 2, analysis of forward rate. Let me go and work out the forward rate. Okay, so now we can juggle at our convenience, right? Bhavya, you mean to say shuffle the questions? Yes, you can do that. So I'll draw a table, particulars, computation. The last column heading is going to be result. Okay, so now year 0, what is the exchange rate they have told over here? Is it 2.5 FR per rupee? Okay, now they have told FR is going to depreciate. So friends, we have to be very careful of how we do that. Okay, I will write down the other way also, rupee per FR. So what is 1 divided by 2.5? Do you get 0.40 rupee bar FR? Now, FR is depreciating by 5%. So tell me what is 0.4 minus 5%? You will get 0.38 rupees per FR. What is the life they have given? in this question? Have they given the life somewhere? 5 year. Okay, so I have to do it for 5 year. Again, minus 5% will get 0.361. Year 3, hold on. I think I should draw lines. Not like this. I should draw neat lines. Year 4, and the last one is year 5. So now 0.361 minus 5% will be 0.34295. Again, minus 5% will be 0.3258, and minus 5% will be 0.3095. So now I should do 1 divided by 0.38. You will get the number as 2.63. So when FR is depreciating, your rupee is actually appreciating. So that is what I'm trying to explain over here. 2.77. 1 divided by 0.34295 will be 2.91. 3.06. 3.23. Okay. Wait, let me check how your textbooks have done it. No, this is the right answer, but your textbook has done it the other way. They have just added 5%. That is not conceptually correct. But if you do 2.5 plus 5% means you're trying to say that FR is appreciating, sorry, rupee is appreciating by 5%, but that's not the correct answer. What to do? This is the correct one actually. This is how you're supposed to do. But your material has done it the other way around. Faro is expected to depreciate against INR by 5%. Rate of depreciation and appreciation can never be the same. 2.5 plus 5% is wrong, George. That is not correct. But if I do like this, 2.63, 2.77, 2.91, almost the rates are the same. But 3.19, we get 3.23. What they have done is conceptually incorrect. Now, what do? I can't give you that answer because that's wrong. Do one thing, we'll write down like this and we'll say, friends, I'll just repeat the concept of appreciation, depreciation first so that, you all remember what we had learned in our class. If your spot rate is, let us say, 40 rupees per dollar, your forward rate is 50 rupees per dollar, then what is happening? Your dollar is appreciating and your rupee is depreciating. Am I right? So when dollar is appreciating, it will be 50 minus 40 divided by 40. So you get 10 divided by 40, you get the rate of appreciation as 25%. But depreciation, the formula would be 40 minus 50 divided by 50. So 10 divided by 50, you get the answer as minus 20%. Rate of appreciation and rate of depreciation are never the same. They are always different. We'll do one thing, we'll stick to this answer because anyways, the exchange rates are almost the same as to what they have got. So we'll stick to the correct number. Let's not do it incorrectly. They have very clearly told FR is depreciating. Had they used the word rupee is appreciating, then what they have done is correct. George, no, 40 by 50 by 50. Whatever comes in the right side is what comes below. Maybe I'll explain to you in a different way. See, here, the formula, if you're using F minus S by S, okay? So 40 is the base, correct? This one, you can do it in a different style. What is 1 divided by 40? 0.025. 1 divided by 50 is what? 0.02. So you can do 0.02 minus 0.025 divided by 0.025. Again, you will get the same answer of minus 20% only. This is also F minus S divided by S. You will get the same number. Okay. Yes. So you can give a note below this. Okay. ICI has considered rupee appreciation by 5%, which is incorrect. Please write down this. Are you all done? Can I go to the next part? Balance, I will do it in Excel. It will not get over if I do it here. Okay, I'm going to the next part now, friends. Okay, shall I do it in Excel now? Okay, this was already pasted, so I'm deleting this part. Yes. I'll put the heading over here. Year 0, 1, 2, 3, 4, 5. Okay, ready? So now what I'll do is I'll go back to the basic data, read and understand this part one by one. Arjun, your doubt is how will we complete this in 3 hours? That's a different question. We should learn it. Maybe they will not ask this. Maybe they'll ask a smaller version of this question. How I found the appreciation in table for 1 year. Guru Nirupama, see what I have done is they have told FR is going to depreciate. So if in order to make sure that FR is depreciating, first I should make FR the commodity. So I made 0.4 rupee per FR. Then I did minus 5%. That gives you the forward rate. So by that I found out the depreciated rate. But once I did that minus, I should take that and into 1 divided by, I will get 2.63 franc per rupee, because if FR depreciates, rupee is going to appreciate. All right. Yes. So now I'll go back and I'll just read through it. So investment is coming to 80 million and 6 million. So I'll just write down over here one by one. First thing is investment. I'll put everything in millions. So here it will be 80 million. Correct. Working capital ideally should come as how much over here? 6 million. But that money is actually borrowed. So what happens is, ideally speaking, I should show this 6 and then I should show an inflow, and the net effect ideally should be 0. 1 minute. Sarvamangala, we can do it that way. We can do initial, in between, etc. Shall we do it that way here first? So first one, 80 million is going to be initial. This is also actually going to be initial. This one is also a borrowing that is happening in year 0. After 5 years, this is going to be happening in year 5. This will also happen in year 5. This will happen in year 1 to 5. Farland inflation will be from year 1 to 5. Depreciation will be from year 1 to 5. This one will be from year 1 to 5. Inflation will be from year 1 to 5. Taxation will be for year 1 to 5. This profits remitting will happen every year. Tax in India will also happen from year 1 to 5. Taxes paid year 1 to 5. Discount factor is, we don't need a life for that. Okay. Right. So keeping this, what I will do is I'll go back to the question now. So working capital is coming to how much? 6. But instead of this, what will happen? I will be receiving a loan also. How much loan am I receiving? Plus 6. So my net investment over here turns out to be how much? Only 80. Because Okay, so I'll put it this way. After we put it this way, then I'll go to the next part. Investment in plant and machinery is put. This is put. Working capital requirement is also put as 0. Working capital will be subject to inflation. Okay, so the inflation part is also told. After 5 years, subsidiary will be taken over by the government. That happened in the 5th year. So I think I'll put that money. That is an inflow at the end of 5th year, correct? Inflow from the government. So that happens in the 5th year. You get 2, and that same money will be used as repayment of loan also. So the net effect of this will become actually 0. Net cash flow 30 million per year. Okay, it will be 13 year 0, and they have some inflation that is told. How much is the inflation told in Africa? 8%. So I'll just put this into 1.08. Okay, 32.4, 32.95, etc. So once I get this inflation, depreciation is 20% on straight line basis. So depreciation will be on the asset, you will be paying how much? 20%. That is minus 16. Okay. So you get 1 minute. Minus 16. Correct. After depreciation, they have told 1 minute. Let me go to the next page. George, you want the last page? Hold on. George, I'll show you. You mean this page, right? I'll show you later. Let me finish off now. Otherwise, I will also lose my flow. Okay. So where are we? We are here. Depreciation is done. Now VK will lose 8 lakhs. That we'll put it later. First, let us put the farland profits alone. So here I'll put the heading as farland cash flow. Yes. Farland cash flow. So depreciation is also put over here. What is the next thing that's coming? Inflation in India, will take it later. Tax in farland is going to be 20%. All right. So I think what I'll do is I have taken this. I need to put interest also, right? What is the interest that they have told? It will be finance at, I think 10% is the interest rate that is told, correct? Okay, so here it will be on this 6 million, 10% will be the interest. So I'm assuming that interest will be the same every year. Okay, so net cash flow, I got this. So from this, I will get the PBT. What will be the formula for PBT? This minus, sorry, not this. I should just put the sum because it's already in negative. 15.8. All right. So once I get this, from this, I'll reduce the tax. What is the tax rate in farland that they have told? Farland tax is 20%. So on this, into 0.20. After this, I'll get profit after tax. So once you get profit after tax, what will I normally do? I will add back depreciation, correct? So depreciation will be this plus, or I'll put add back depreciation. So I'll get, then what are we supposed to do? We are supposed to less capex. So is there any other capex that is told from year 1 to 5? Nothing is told, correct? Last will be what? Less additional working capital. That will happen, friends, because they have told that, there is going to be an inflation of on the working capital is what they have told. 1 minute. What is your doubt? Why depreciation for year 0? Okay, year 0, you are beginning, there will be no depreciation, correct? I'll remove that. Cash flow will be there. Okay, so I'll remove that. That's fine. But if I remove that, okay, I'll do one thing. I'll put 16 over here directly. Is that fine now? And this I'll put it as plus. So I'll put the formula over here. I'll do one thing. I'll put into -1. The lesson all automatically became like this. So PBT, the formula would be this minus depreciation minus interest. Okay. So now below this tax, I think already has come. So PAT has also come. Add depreciation will now be direct number. Less capex is not there. Working capital, we'll have to work it out. So I'll just keep it pending. So once I do this, I will get the free cash flow in which place? For land. Okay. I'll highlight this also in yellow so that we know that this is working note number 1. This also I'll make it yellow. Heading, I'll put it like this. Okay. So first working note is over. Can you please write down or understand this part now? I am yet to finish it. It's not fully completed. Yes, Deepika, you have a doubt? Tell me, Deepika.
Sir, the net cash flow for operation is 30 million per year.
Correct.
Is it in from the year 1? Why are we taking it from year 0 itself, sir?
1 minute. Let me just understand that part because in the question, what have they told? They have told that it is expected that shall produce a net cash flow of 30 million per year at the current price level over the 5-year period. Okay, see, basically the 30 million come here, but here it will come as 32.4 because 30 million at the current price level is what they are saying. Understood? So if you want, what I will do is year 0, if I'm writing that's creating confusion, I'll just put 30 into 8% and I'll remove this because it's actually coming from year 1 only.
Okay, sir. So over the
Okay.
next 5-year period means we have to consider 1 to 5 years.
Exactly. But 30 is in today's terms. So 30 plus inflation will give you the money terms. All right.
Okay, sir. So
Okay.
whenever the current price level is given, it is for the year 0.
Exactly. Yes.
Okay, sir. Thank you, sir.
Thank you. Right, friends. I believe you're all clear with this part. So what I'll do is I'll just put the second one as first. I'll find out the additional working capital. Then I can at least close this entire sheet. Okay. So here I'll write down first one will be total working capital. Wait, I'll just freeze pane so it will be easy for me to check the year. Okay, right. So here additional working capital, I'll start with total working capital. So we are starting with a working capital of how much? 6 million, correct? 6. And they have told that there is going to be inflation on the working capital also. How much is the inflation they have told on working capital? I think it's the same that we have already got. Inflation in India is 3%. What is the inflation in FR? Have they given 8% as the inflation there? Correct. All right. So here I'll write down this into 1.08. So you get this from this, I can find out the additional working capital. That will be this minus this. 0.48, 0.52, 0.56, 0.60, and 0.65. Okay, so I'll just highlight this. Yes, is there any doubt on this? Okay. So what I'll do is I'll just take this additional working capital and put it over here. This will be equal to this number and pull it forward. So once this is done, what I can do is I can put the initial investment over here will be 80. I'll put it as minus 80. Here you will get the final one would be profit after tax, add back depreciation, minus capex, minus additional working capital. This is going to be your cash flows in Farland. 32.39, 34 and 37.33. Wait, last year there is a small collection also. Wait, apart from this, okay, you have to repay the balance loan also, friends. See, what happens in the last year is you have to repay the entire loan. You cannot just repay 2. So I'll have to repay 6 over here. So here the formula would be whatever I've got over here plus I will receive this 2 plus means I have to pay 6. So my closing cash flow will be, oh, something went wrong. Profit after tax, add back depreciation, minus capex, minus additional working capital, plus 2 crore I'm getting, minus I'm paying 6. 33.33 will be the final year cash flow. So I'll just highlight this in red so that you remember it. Yes. So this is the cash flow. Everybody clear? Then we got additional working capital also done. We've got the foreign exchange also. Now what happens is, friends, whatever is the tax that is paid in Farland will be used as credit in India. Sarvamangala, can you raise your hands? Yes, Sarvamangala, interact with me. Normally, what do we do? We use the formula profit after tax plus depreciation minus capex minus additional working capital, correct?
Yes, sir.
Here, apart from that, what is happening? You have a loan repayment of 6 that's happening over here. That's an outflow.
Yes, sir.
And you receive 2 from the government of Farland.
Right, sir.
That will be my inflow.
Okay.
So I consider these 2 things also.
Okay, so apart from our basic, whatever we do, we have to consider these two cash inflow and outflow as well.
Yes, correct. Because there's a repayment of loan is new and the money received is also new. Okay.
Got it, sir. Got it. Thank you.
Thank you. What is the meaning for VK losing 8 lakh? I'm coming to that part, Shweta. Had they not opened the subsidiary, they were already exporting and making 8 lakhs. Now they are losing that money. So that becomes an opportunity cost. So I believe we are all done with Farland cash flow. We are done with additional working capital also. Now, I would like to work out the tax credit in India. How much will be the tax credit that we will get in India? Okay. So first I'll write down over here tax paid in Farland. Okay. Then here I'll write down the exchange rate. So what is the exchange rate that we had? We have already found out over here, right? 2.63. Then 2.77. 2.91. 3.06. 3.23. Okay, so this is all FR bar rupee, correct? So tax in INR, I will have to divide this divided by this. So I'll get 1.2 as the tax. No, some mistake I have done. One minute, friends. Let me just check. I've made some mistake here. PBT is 15,800. That is the number that we have. On that, you have tax. Tax rate is 20% or 10%, friends? It's 20%, right? Why has the suggested taken it as 10%? They have taken only 1580. exchange rate. Okay, 601. So I think 601 they have taken as an outflow. I think I got the point. All right, all right, all right. Let me just rework in our style. I'll not start with, I will start with PBT in Farland. Okay, I'm just changing my calculations. So what is the profit before tax that you get over here? Is it 15.8? I'll just copy paste this number here. All right. Ideally on this, what is the, so I'll just convert this. So this amount is actually in FR. Am I right? Okay. So on this, ideally, if it was in India, I am supposed to pay a tax at how much percentage? 30% into 0.30. Okay. But less I will get tax credit for whatever tax I have already paid. That will be 3.16, etc., etc. Okay. So I'll write down balance tax to be paid in India. That will be this minus this. So I have to pay this much money extra in India. For this, I will use the exchange rate. So what was the exchange rate that we had over here? 2.63. Okay, then you have 2.77. Then you have 2.91, 3.06, 3.23. Okay, so from this, I'll find out the tax to be paid in INR. So how much will be the tax that I'll pay in INR? This divided by this. So I'll get 0.6, 0.6, 0.66, 0.7379, and 0.85. I'll give you a minute's time, friends. Scribble down and absorb this data now. Beautiful question, friends. Please pray to God this doesn't come in the exam. Pray to all gods possible. Yes, Maria, both are same. You can all directly put 10%, but if you put directly 10, it might be confusing. So I just thought of putting it in the right pattern. That's all. Now, finally, can I go to the final working note now, friends? So from this, I'll write down over here NPV in India. Because finally, we are doing all this because we need money in India. Correct? So I'll write down, okay, free cash flow in Farland. First, I'll write down FCS in Farland. So what was the free cash flow over here that you have? 28.16, etc., etc. Correct? Apart from here, year 0 also we have some cash flow here, right? How much is that? 80. Correct? Then I'll write down over here exchange rate. So the exchange rate also, I think we have got first year is going to be 2.5. Okay, so now free cash flow in Indian rupees. So I'll now convert the entire thing into rupee. So this divided by this will give you minus 32, 10.71, 10.94, 11.13 is what I get here. Okay, 11.36. There's a slight deviation because of the exchange rate difference. Okay, 10.32. But that's fine. From this is the cash flow that we get in rupee minus less. I will be paying some tax over here. How much tax extra I have to pay over here? 0.6, etc. Correct? So after paying the tax, okay, so free cash flow after tax will be these are the numbers that you get. And now I will put the opportunity cost. They have told that had I not opened this, I was getting some money over here. How much was the lost sales in India? 8 lakhs per annum before inflation. So in India, we have to add inflation to that also. So here it will be 8 into, I think in India, the inflation is only 3%, right? 8.24. 8.24, 8.49, 749, etc. I think I've covered everything. Tax is covered. This is also covered. So I'll write down over here final cash flow. So here you have minus 32. From this I'll reduce my opportunity cost. 1.87, 1.766, 1.59, 0.19. Let me confirm. Hold on, it's 8 lakhs. So not 8 million. I've made a mistake here. It will be 0.8. So everything will change accordingly. Okay. Bhavya, 1 minute. Let me process. I will allow you to speak after this. 32, 9.2, 9.4, 9.5, 9.6, 8.4. Correct. The numbers are correct. Some messages have come. I have replied to all the message. I will share this entire file with you, Kritika. Don't worry. Bhavya. Yes, Bhavya. Tell me now.
So the amount that is remitted to India is the amount after the tax that we get in FR, right?
Correct.
So the 30% should be on the profit after tax amount.
No, no. They have not told that when the money is remitted, only on that you have to pay 30% tax. No, what they have told is ideally on the same profits you're supposed to pay 30% tax in India.
No, they have given after tax profits are remitted to India.
Correct. Let's just read the sentence once again. All after tax profits are remitted to India. Indian tax at 30% is charged on the profit earned.
Okay.
Okay. So even though remitting is happening, but if you India, you are supposed to pay 30% on the profits you get there. Because foreign income is also taxable in India, correct?
Right, sir.
Please revise the residential status.
Thank you, sir.
So we get the final cash flow, friends. The only discount factor is left. Please cooperate. Where is the discount factor? 12%. Here it will be 1 divided by 1.12. Have they told anything about perpetuity? Please pray that they haven't told. NPV should be positive. After all this hard work, if it is negative, I will shoot this fellow. Plus 1.55. NPV is positive. So the project should be accepted. We are done with this question, friends. I'll give you 2 minutes. Read through the question. Enjoy the beauty of the question and the answer. I have covered opportunity cost also, Sana. That is 0.8 million. I have shown that here. Where is it? This one, 0.82. That's with 3% inflation. All right. So friends, we are done with this question and we are done with MTP series 2. This last question took away all our energy. I am not copying this into the notepad. I will share this entire file just like this. I'll share the entire file, Bhavya. I'm saving this right away now. MTP part 2 atom bomb question. This I don't want to delete, friends. This can be used for future classes also. Okay. So I'll do one thing. I'll share these files also with all of you now. So we are done with today's session. Just one quick feedback, friends. I'm asking only with the final people who are, here. One opinion that I got was that your exams are when is your SFM exam? It's on November 3rd, is it? Okay. So November 1st, your FR exam will be over, correct? Okay, so one student just gave me a feedback that November 1st, after the FR exam gets over, evening from 7 to 11, if I do some one chapter revision, like for example, Forex in 3 hours, because students, when they come back, they're all emotionally drained with FR and they're not able to do self-study. So if I'm able to cover Forex on that day for all of you, then from next day onwards, you can do self-study. Is that model workable or not workable? Will that be useful or not useful? Just be honest and let me know your opinion, okay? I want a clear-cut, frank opinion, because the time would be maybe after the exam gets over, you'll reach back by 7 o'clock, right? So when you come back, you're all more sums, yeah, problem solving only. So we'll do the crucial problems. Yes, sums, mainly the problem part. Otherwise, we'll be wasting that day, is it? Study plan for 1.5 days. Okay, study plan also, then what I can do is, study plan will be simple, friends. If you have attended my class, it's like in the same order. We start with the easy ones, security evaluation, portfolio, etc. But those chapters, if you do Forex, a major one, but big headache will be over. So next day you can focus on the easier topics also. Am I right? Let me just work it out. Okay, I'm not sure about this. Derivative or IFM? Which one would you prefer? Derivatives or IFM? Both will not work out. I will go mad. Deepika, we cannot tell like that. Sometimes not even a single question comes from MTP. RTP normally questions come. Sometimes questions come from MTP also. We just cannot predict like that. Areas where students go wrong. Derivatives, is it? Siddharth is recommending derivatives. Let me just think over it, okay? Forex. Majority want Forex to be finished as a teamwork, is it? Okay. Okay, so Sindhu, I will do one thing then. I think Forex is the majority. I'll go with Forex. Okay, I'm not yet confirming. I'll let you know in the TJ squad group. So what I'll do is that day night, maybe 7 p.m. to night, maybe 11 or 11:30. I'll pack up Forex that day night, and then you all can sleep. Even I can go and sleep peacefully. We'll do like that. Is it? All right, I'm not committing now. I just need to plan my schedule also accordingly. But if that's useful, because many students are telling me to do that. So I thought of asking you a frank opinion about this. Sure, Sahela. If that's the case, we'll definitely plan something like that. Okay, not committing now, but I'll definitely check and get back to you on that. Okay. So wait, I'm not stopping my class. I'll just share all the files. You please confirm that you got it. Yesterday after class, some students messaged me, I'm not getting the file. Start 7:30. Center too far, so reached only by 7:30. Is it? Okay, 7:30. Then we can do by 7:30, and we can go till night around 11:30 or 12. Finish off that, give you some energy for the next exam, and then pack up. Correct? So if the FR paper is an atom bomb, at least a cushion will be there. I think I'll do one thing. I'll make a new folder here now. MTP series 2, correct? Inside this, I will go and share the handwritten notes. And what is the other one? Atom bomb question. Please confirm that you have got this. Next, I think I will also upload the MTP question, because only then it will be complete, right? This is the question. No, this is not the question. This is the question. Oh, it has got saved so many times now. Let me do it again. This one, right? Save as. Yes, friends, please confirm that you have got it. Only then leave the class, okay? You message me. I'm losing out on a lot of messages now. Too many messages are coming now since the exams are nearing. I'm not able to reply to all of you. Please do understand that, okay? Where did I save that MTP? Handwritten note MTP. Yeah, final inter. My dear friends, where is the question? Yeah, SFM MTP part 2. Done. All right, friends. Thank you so much for your patient listening. Okay, Sindhu, you want to plan on the 1.5 days? What is the time to be allotted for each subject also? I'll definitely work on that. Okay. Guru Nirupama, one day before the exam, ODBE, you do Super 25. That is crucial because we have done some very good questions. And Guru Nirupama, you have attended my 100-hour crash, right? Those questions can be covered in ODBE because that is made in a way that you cover it in 1.5 days. Okay, that covers maximum adjustment questions. All right. Okay. Thank you so much, everyone. Thank you, Shweta. Yes, MTP series 1 we need to plan, right? Friends, I'm traveling tomorrow night. So tomorrow I have to do a CA inter session. So that will be over. Can we do it on Tuesday, next Tuesday? In that one day, we'll finish it off. Night will start at 6 o'clock and we'll finish it off by maybe 11 or 12. Tuesday is festival, is it? What festival on Tuesday? We can do it, right? CA students don't have any festival. I only don't know which festival. Dasera is there on Tuesday, is it? But if I delay it too much, also it will become too long, right? Saraswati Puja is on Tuesday. CA exams are the big festival, is it? Fine, I'll do it at that date itself. Tuesday evening, we'll do it 6 o'clock to Wednesday. I'm okay with Wednesday. Are you all comfortable with Wednesday? But Wednesday will become too late, right? It will become 25th. So many students will have to start preparing with FR. I'll do it on Tuesday. It's okay if you are unable to attend. What you can do is you can do the recordings. Anyways, recordings will be available, right? We can do it like that. Okay. What is AEAP? I think we'll do it on 24th. Tuesday, we will do it. We'll pack up on Tuesday with the session and then November 1st night, I will plan Forex. Okay, fine. Thank you so much, friends. Thanks a lot. So let's pack up now. Deepika, you have a doubt? Yes, Deepika, tell me.
Sir, can you hear me, sir?
I can hear you. Tell me.
Sir, similar to the first question, we have a few questions in book, sir. IFM illustration, sir.
Yeah.
So there the price is given as that is here we have taken it from the year 0 itself. In the question, nothing is specified like that, sir. That is year 0 or it is from year 1. Few sums they have taken it from year 0 and few they have taken it from year 1, sir. So in such case,
First of all, don't worry. In my experience, such questions won't come in the exam because you saw how much time it took. It took us 40 minutes in Excel. So in the exam, if you do that question, 1 hour will be gone. Normally, such questions won't come. Okay, so don't be pressurized. Do one question is enough. Rest for time being, you leave it. If it comes at that time in the exam, anyways, you will not have time to manage that question. Better will be to do the other questions and finishing it off. All right?
Okay. Thank you, sir.
All right. Thank you so much, Deepika. Thanks a lot, everyone. See you next Tuesday, with which we'll pack up with our MTP session and we'll pack up with all the things that we have done. And then we'll have one day before the exam, one marathon session on Forex. Okay. At least 20 marks, then we will try an exam. Vindhya, you will have to negotiate with the valuer. Thanks a lot, friends. Take care. Have a nice time. Thank you.